Hello friends and welcome to another portfolio review here at Arctic Money channel. On the screen right now you can see the last portfolio review I did on March 2024, so March this year. This is how my portfolio looked back then. Quite a lot has happened since, and I think it's only for the transparency reasons of my channel and how I want to do these videos on investing here on YouTube that I regularly, between certain intervals, couple of times a year, 3-4 times a year, I show you how my portfolio looks, what are my holdings, and how it's doing. So this was the situation in March 2024, as you can see here on the screen. Pretty okay. I was still beating the index investor with monthly additions in S&P 500 by 2%, so that was a tight competition. And just before we get to the current day, how the portfolio looks right now, right today, the benchmarks here that I am using is Standard & Poor's 500 dividends reinvested. So that is the performance of the whole Standard & Poor's 500 index with dividends reinvested since I started investing in 2018. And under it, you can see index investor with monthly additions in S&P 500, which is here it was in March plus 48%, while the index was up plus 96%. So the difference obviously comes from the fact that your returns obviously are in this case lower if you every month you add to your position when you started from zero in 2018. So I feel it's like much more realistic to compare myself to the index investor with monthly additions in S&P 500 than it is to actually to the index with dividends reinvested, because the number you see there, plus 96%, would mean that I would put all my money that I have in 2018 to S&P 500, and that would be my return. Obviously, for me, and I'm guessing for many of you who are watching my videos, this is not realistic. You don't have all your money available in 2018. You get money every month from your work. When you go work, you get your salary, or if you're an entrepreneur, you get revenue stream throughout the year. So you see what I mean. Comparing yourself to S&P 500 index is pretty unrealistic in my opinion, and a better benchmark is obviously index investor with monthly additions in S&P 500. And you might ask why S&P 500? Well, I wanted to choose as the benchmark the toughest index I can find, that what has been the toughest index, let's say, after global financial crisis. I think we all know what it is if you exclude NASDAQ, so the tech-heavy version of United States stock market, and just take 500 biggest companies of USA S&P 500. That has been the toughest benchmark. And as said, you can now pause the video and check what I had in my portfolio back in March. But now we move to this day, and here is how my portfolio looked 5 days ago when I'm filming this video now, or recording this video. 20th August 2024. Performance has been for my portfolio plus 41%. So I have actually, my performance has declined by 9%. Let's get into that soon. Annualized since starting investing, that's nothing spectacular, only plus 5.4%, one might say, but hey, it's still plus 41% up my investing, so I have covered myself from the effects of inflation pretty well. My money has kept its purchasing power at least, which is like the lowest bar I want to go over. But yeah, what has happened then? As you can see, my portfolio has declined by 9%, not much, so pretty flat line. But what has happened in S&P 500 dividends reinvested, we sit at plus 128, up from plus 96. And yeah, well, the index investor with monthly additions in S&P 500 is now up plus 63%, and that is, if we look quickly here, It was in March plus 48% and now plus 63%. Already in my last portfolio review on March, I said that I feel that the United States market is pretty overheated. I am saying the same thing again. And as you can see, it has only gone more up since my last video portfolio review on March. And let's take a look at that. What has been during the last 8 years. You have gotten from the index with dividends reinvested annualized gains of plus 13.5%, which is obviously huge. And even the index investor with monthly additions is up plus 7.8% compared to my plus 5.4%. So yes, doing this video is now really hard because I am losing to an index investor, I guess for the first time in my life, or at least in the history of this YouTube channel. I am losing to index investor, and I must face it now. So now probably somebody is laughing at home like, why are you doing stock picking if you can't even beat the index? Well, as I said earlier, I am comparing myself to, we can probably all agree, to the toughest index out there. Let me just read you quickly the return percentages of 5 different indexes during the last 5 years, past 5 years. S&P 500 is up plus 96%, as you can see probably from the screen there. World index is up plus 86%, so 10% less than S&P 500, but this probably is explained by the fact that the world index is really heavy, I guess like 65% in the same stocks as S&P 500, so naturally they correlate as things stand. And then we can see Euro Stoxx 50, that's only up plus 46%. So that already, if you invested all your money in Europe ETFs, that would be pretty close to my performance at the moment. If you invested in S&P Asia 50, so 50 biggest companies of Asia, you are up plus 21%, which is already much less than my portfolio performance. And then I just want to highlight this. You know, I am from Finland, and if you invested in Helsinki Stock Exchange during the last 5 years, you are up 12%. So that is absolutely poor performance last 5 years from the Helsinki Stock Exchange companies there, the index. Why I wanted to say all these numbers to you is that it has definitely mattered a great deal which ETF you invested in, which country you invested in. As said, if somebody would like to invest in ETFs, my advice would be that just have sufficient diversification even in ETFs. As said, the world ETF probably is the best one, most diversified, but even that, according to my knowledge, is something like 65% in the same stocks as S&P 500. So maybe that is not even enough diversification if you start thinking of it. Of course, if you invested in S&P 500 every month during since 2018, I congratulate you. That's an absolutely amazing performance. But then the question I want to ask you is that since 2018, so last 6 years roughly, will the performance continue with S&P 500 like it has been for the last 6 years? Are you sure the next 6 years are gonna be similar? You know my answer already, and I don't think so. I don't think this all the time continuing overperformance by US stocks can continue forever. Obviously it can continue, and I might be wrong, but I am not willing to put my money in S&P 500 indices. I want to continue my stock picking. Even though I'm losing at the moment, I know that things can change really fast, and these are the times I think when I need to be patient, and my patience is tested. Do I trust my own process as an investor, which I have learned and in which I want to stick to? I want to keep doing it still. I trust my process, and I'm not gonna panic over S&P 500 overperforming me, because I know that kind of thing would be the worst mistake I can do. So I don't care. I'm continuing, and I will hopefully see a day when I beat the index investor soon again. As I, for example, before last winter, I was beating the index investor in S&P 500 by a big margin. Even things change, and when the U.S. stock market is doing these kinds of results, I don't have a way to beat it. I cannot beat it with my investment strategy. That's that. All right, but now that you know how I'm comparing myself and where to, let's move on. Some people have asked me that I should probably tell on top of my portfolio of holdings how much I have cash, but since I think the amount of cash is such a personal thing for everyone, it doesn't add any value to anybody, because we all earn our cash in different ways, in different amounts and so forth. But what I can say about my cash situation right now is that I'm pretty close to 100% invested at the moment. I don't have much cash available. I have very little currently available. So let's see where the cash is at. You see, let's probably touch on, let me show you the portfolio here. The older portfolio from March, I can tell you that Eurofins I have sold, as probably the ones watching my channel know why I sold it. That was because of the Muddy Waters research short report on Eurofins that caused me selling all stocks of Eurofins. If you're more interested in that decision, go and check that video. Alphabet, I felt that Google became a little bit overvalued back in the days at some point here in the spring, summer, so I sold out of that. And finally, the small position I had, Park Lawn Corporation, is no longer in my portfolio because Park Lawn Corporation was bought out of the stock exchange in Canada. Private equity firm bought it. It was quite fun story because the stock was trading pretty much at the same price I first time bought it, and which was the average price I had bought it. Then came the news that private equity will take the company private again, and the stock jumped 65% in one day, and I got my reward and sold all stocks the same day. So investing in Park Lawn Corp was a great story for me. Obviously, only thing I'm sad about is that I didn't buy more of it before. It was the smallest position in my portfolio, but still, it feels really good when you have done a valuation on company and then private equity comes and says that this is actually 65% more valuable than what the stock is trading today, and buys it off from the stock exchange. So that confirmed I was right, basically. Or I don't know, maybe they overpaid for it. I don't know. But I always felt that Park Lawn Corporation was really undervalued. And sometimes you get your reward by private equity coming in and buying the whole company away from you. And so that was a happy moment for me. Back to this day, and here you can see my portfolio back in August 2024. Flow Traders, you know it, still in my portfolio. Sprott Physical Uranium Trust, still a big position uranium. Core Civic, private present operator, still part of my portfolio. GEO Group, in the last portfolio review I already told you their competitor I sold. And by the way, Flow Traders, a liquidity provider here in Europe. So that's that. Go and Google the company if you want to learn more of it. I have talked about it very much on my channel, so even go watch a video from my earlier videos on Flow Traders. Then a position you see I have been growing very much. Dr. Martens, boots manufacturer from UK. I feel it's a strong brand and the stock is trading just too cheaply at the moment due to headwinds in retail sector. And due to headwinds in the retail sector and recession fears, also a new company in my portfolio, Ulta Beauty, which I have been growing to a substantial amount, 9% of my portfolio at the moment, the beauty retailer in the United States market, looking to expand outside the US also. And I think the stock has been caught in the same retail headwinds as Dr. Martens, and that's why it went cheap. Obviously, I guess many of you watching my videos know that I wasn't the only person buying Ulta Beauty during recent months. There has been another investor, I don't know if you know who he is, but his name is Warren Buffett, who started buying Ulta Beauty too. So that feels pretty good when I know that I was buying Ulta Beauty at the same time as the greatest of all time investor in the world, the GOAT himself. Feels good. Alibaba, you know, it has been a long time in my portfolio. Let's see, I have been reading some news about some dual listing in Hong Kong happening with the Alibaba stock and Chinese investors getting a better access to the company stock. So let's see what happens with Alibaba in the near future. Carriage Services, funeral home operator, competitor of Park Lawn that got bought away from the stock exchange. So I feel there is another company in the same industry that is undervalued still. Carriage Services 6%. BML, Biomedical Laboratories from Japan, is 5% of my portfolio. Company operating only in Japan. Absolutely necessary health services, testing services, and has a huge pile of cash, which is one of the catalysts why I bought the company to my portfolio. So BML, Biomedical Laboratories, that's the first Japanese company ever in my portfolio. Kamux, surprise, surprise, I actually have something from Helsinki Stock Exchange. Seller of used cars, Kamux. The stock just got hit really bad with bad results, bad earnings, and I a little bit increased my position in Kamux. Difficult company to invest in, to be honest. There is no moat with the company. I haven't identified any, but still consolidation happening in Kamux operating markets is something I'm betting on. If that happens, I think Kamux is able to do better results in the future, and that is basically, in one sentence, my investment thesis to the company. Then some more uranium in the form of Global X Uranium. Tyson Foods, meat company from US, still a small position in my portfolio, I think. Carriage Services and Tyson Foods are probably trading at fair value. I need to see how long, if their stock price keeps going up, how long I will hold to them, because they are not like magnificent buys at today's levels, in my opinion. And then finally, one more retail luxury stock. Oh, actually the only luxury stock I consider luxury in my portfolio, Burberry. Another UK stock, 4% of my portfolio. So as you can see, fashion from UK is something I have turned bullish in, because I have 14% of my portfolio in UK fashion stocks, Burberry and Dr. Martens. So that I just felt that there is value in UK market, and these two are in my portfolio now. Not long ago I did a video on Burberry, LVMH, and Kering, and also Kering was really close to entering my portfolio, let's say so. Fairly valued company, and so might be Louis Vuitton, Moet Hennessy this day. So there is a clear trend. I think you can see what I have been betting on, and that's the rebound of retail sector and probably also luxury sector in some form. I think these stocks, luxury, retail, beauty, are trading at least in their fair values. They are not overvalued in my opinion. So here it is, my portfolio, how it stands today, August 2024. Let's see. Of course, as I said, feels devastating that I'm losing to an S&P 500 index investor with monthly additions to the index itself. And my annualized returns plus 5.4% obviously is not what I want it to be. I want it to be higher. I want it to be higher. I want to do better performance, but as a patient value investor that I could describe myself being, I understand sometimes not sometimes, always, if you want to be a successful investor, patience is needed, and that means you need to be able to live with yourself while you are underperforming some indices, and that is where I'm at today, I think, and this is where we continue forward. I am not changing anything. I'm sticking to my plan, and let's see what the future holds. Thank you for watching this video. See you on the next one again. Bye bye.